AIF industry in India today has cumulatively grown to a size of 12 trillion rupees, which is about $140 billion. And if you really look at the deployed capital, it would be close to about 40% of that stands at around $70 billion. And that's really been a growth of 30% year on year over the last 10 years. Clearly, I think this has made AIF industry as mainstream as against what we used to typically refer to as an alternative assets. And what that has really done is clearly from policymakers' perspective, it has pushed AIFs and the alternative industry into something which is strategically an important tool for India to achieve its growth target. So a lot of positive policy making to encourage the growth of this industry. But at the same time, I think it also is recognized that the size of the industry creates a higher systemic risk, and that has obviously prompted SEBI and the regulators to really regulate this industry, which was always growing on the strength of a light touch regulation. I mean, there's always a debate of what approach the policymaker should take and whether the industry should be allowed to flourish and the regulation should follow, or the other way around. Now, having said that, looking back into 2024 and what were the key kind of milestones for the industry, if you look at it from a regulatory perspective, clearly SEBI has come out with provisions which deal with winding up of the fund. I mean, a long pending, unaddressed issue of what happens to a fund beyond its fund life. Thankfully, after some iteration, we now have a regime which allows practically a scheme which has achieved the end of the term to continue and liquidate its investment as a liquidation scheme. SEBI recognized the need for allowing the existing scheme to continue as against creating a new scheme and the related tax transfer issues. So hopefully this should kind of address the issue for the industry to a great extent. And that followed with other governance related developments, which included expectation from the manager to undertake individual investor level due diligence when looking at every investment, especially from an evergreening or a FEMA perspective. And that too, I think the standard setting forum has now come out with certain checklists for the AIF manager to look into when they are looking at a transaction. Partially addresses the concerns of the industry, but one needs to see that this may not be the end of it, and we might see in 2025 some more developments on that front, possibly. But more importantly, I think looking back, I think at 24 and what we can expect from 2025 as an industry, I think that's more exciting. I think the pace at which the economy continues to grow and the recent data shows that the growth will continue going forward, which means AIF industry can expect a lot more in 2025. On the regulatory front, some of the key and exciting changes we would look for, clearly introduction of VCC, variable capital company structures. Today under consideration whether that would only be for GIFT or would it also be available for onshore industry. What we may also expect going forward is more changes to the regulation and rationalization of the AIF regulation. I think SEBI has been embarking upon ease of doing business initiatives across all its regulation, and we do hope that AIF industry will also benefit out of that review. Also, I think tax changes, especially to address the Cat 3 AIF, hopefully something that has been a long-standing demand. And going forward, it will be an industry which will clearly provide the platform for India to grow into what the ambitions of the economy is. And we do hope that AIF will play a very significant role there.